All right, everyone. So we're gonna start off the charting session with Apple. We got a few new stocks that were requested for today, so it's gonna be good to look at some different chart setups that we have not looked at before as a group. So let's just start with Apple for now. Why is my screen doing this? What's going on? Click this. Hang on, for some reason my screen is not working. Yo, I was messing around on Webull, found an options screener, was wondering how to use it, go about using it. Yeah, so the option screener I actually do use sometimes. But why is this? I think I have to close out my Weeble. Give me a second. For some reason my screen's not clicking. So with Weeble, you can go into a setting, which you set the screener for options. You can filter it to show you the highest contract premiums that had the most volume on the day. Why is this tweet? You're able to go to a scanner and you can categorize it for like the most volume, the highest price option, stuff like that. And it's pretty useful when you get down into it. Give me 1 second, guys. For some reason, my Weeble is not able to drag. So I'm going to end that task and reload Weeble real quick. Sorry about the delay. What are you guys looking forward to this week with stock wise? Anything specific you're watching? Or anything that you are hoping goes big in one direction? I think the main one people are talking about are chip stocks. Okay, we're good now. We're gonna start with Apple. I was looking at AMD and Apple looking exhausted. Yeah, so I'm glad it may have been you that mentioned AMD, CJ. I know someone mentioned AMD, so that's on the list, obviously. And then, of course, Apple is one that I've been waiting for this rejection, falling resistance trend for a while now. So on the daily with Apple, we've been basically speaking on this tap out since around the 156 a share level on Apple, and it finally peaked that after about looks like almost a month straight of upside. A few pullbacks here and there, but the overall trend on the larger frames held for the upside push. Now we're at that falling resistance trend line. Obviously, I say this every week, but depending on which stock you're looking at, if the overall market, which that's SPY or the S&P, SPX, if we do end up having a red day or a drop, more than likely the majority of the main stocks are going to follow: Apple, Tesla, Amazon, Nvidia, uh, Microsoft, Google. Those will usually follow in sync with a drop off and or push. We've seen Apple be green when the overall market's red, and vice versa. We've seen Apple red when the market overall is green. But we're only speaking on the trends for this setup that I'm about to talk about. We've been preaching on the idea of waiting for this tap out for puts, and we're finally at that point. Going off the 4 hour, we've been holding these trends on the upside. And of course, with every rising wedge, you have a resistance and a support trend. The question that we are probably asking ourselves right now with Apple is, are we going to have that push again on the upside like it previously has every time it does touch this support? Whenever we come down and contest, we always tend to have buying pressure based off this. And this will be the fifth contest to see if it's able to bounce off this rising support trend. The main thing that I would focus on with levels, if I'm looking for the way I chart, I look at the major zones or the gap fills. I'm not focused on just like individual pullbacks. Like we could easily go off Friday's low and just use that level around 163 a share for a pullback. But I want to focus on the bigger move that's going to make me wait for it. And I'm not going to be like anticipating a bounce at a level that I don't think has much strength. Obviously, the 163 162.50 to 163 a share is going to be heavy on Apple, but the area and or zone I would be looking at is roughly $160 a share. Yes, that is a $5 drop from close, but that's the reason why I chart this way, because if it does drop this heavy and buyers can't hold it above the area where it would be around the 163, 163 a share, there's a good chance that if it does drop lower, we're going to bounce and or consolidate for a few days and then bounce off the 160 a share for Apple. So that is the reason why I feel like that is the main focal point for a dip buy if we do have a pullback in the overall market or just Apple in general. When focusing on that pullback, there's always the idea of what if I get puts and it goes the opposite direction, it pushes upside. Outside of the high in the past few weeks, which is the 168 a share level, I would focus on the actual double top zone that you would consider from the previous high, and then the high that broke out and faked and wicked back underneath the zone around 167 a share, which I still have that charted from the last time we charted this stuff. Outside of the actual resistance around 167, if we do push, we can wait and see if we do hold a rejection zone on Apple around that 167 a share. So there's multiple ways you can play this. If you are a breakout chaser and you want to wait for a main level to break upside for you to buy calls, you can play the 167 break. If you like playing support holds to buy calls, you can obviously get it on the 163 a share or wait for the main bounce, which I will personally wait for if I play Apple. That will be the 160 a share. And or if you want to play puts, you can play the reject around 167 a share with the switch on instead of the breakout for calls. So depending on what your style is, you'll have to adjust to that. But these are the three main levels that I personally see outside of the overall bigger picture, which is the falling resistance trend that we all should feel like we'll reject since this will be the fourth time. Outside of that, the main levels are resistance of 167 a share. We have the first support around 163 a share. And the main support that I personally like for me, if I would buy, is the 160 a share for a hold and bounce for Apple. Moving on to AMD, I do already have this charted because when I saw someone mention it, I wanted to get some charts laid out for it. And hopefully I don't have to like delete what I put in already and reinsert them. I can just walk my way through it. But we're basically in the same trend, just on a larger picture as Apple with this uptrend. AMD has been uptrailing since last year around October. And every time we make a higher high, we pull back, make a higher low. When we push back upside, we make a higher high and vice versa until where we're at currently right now. The major question is, just like with Apple, could we not bounce and make a major move downside? Could we pull back and see if buyers can keep it up? That is the biggest thing that I personally see with AMD. But the main picture for me is if we do hold these trends, can we push back upside? Going off of risk reward for this setup, if you're playing with time or just anything that gives you a probability, calls is the better idea with AMD right now, but not write it open on Monday. I'm talking give it a few hours, maybe a day or two to see how it moves in this zone for a while. If we look at it historically on the last two bounces, AMD is held for multiple days. It's not a quick 2-day push. It usually takes around a week or if even a week and a half to gain that momentum to push upside. And currently with the current side effect of where AMD is, we're only about 4 to 5 days in. Could there be too much selling pressure? And that's going to be the side effect of no bounce. And we're going to start trailing downside. And in that case, the main support, obviously right now we're consolidating at the main support around 88.3 a share. The zone's roughly $88 a share. That goes back to the previous higher high AMD made before continuing this rising wedge on the upside. So when we're focused on that, if we do break, we want to find the next heaviest zone based off either rejections historically or a bounce historically. When looking at AMD, the main zone that I see, and if anyone else has any ideas that you want to like mention, hey, what about this price per share of AMD? But I see it roughly around $85.80 a share. Anywhere in that area, I feel will be the next main support if AMD can't hold and consolidate above that $88.30 a share. For me, if I want to play calls on AMD, I'm not going to buy right away on Monday if we're just opening around this current price that we closed at. I would like to see a dip back to about $86 a share, maybe play a week or two out for expiration, size light, and hold and trust the move for the long term, like how it has moved historically. If we do consolidate above $88 a share to 88.3 a share, I do want to see volume increase. I want to see a few green candles, maybe on the 30-minute or the hourly. And the main breakout that we want to see for continuation, the first is going to be around $90.50 a share on AMD. But the actual push that we'll need to see to make higher highs will be roughly a zone around this double top earlier, which is roughly 91.6 a share, anywhere up to $92 a share for AMD. That's going to be one of the heavy zones that we'll have to break if we want to see a push to the upside. So the main zones for AMD, obviously, if we're on the daily, we're holding this rising wedge. We're currently at the main support. This will be the third time of the contest. Will we bounce for a third time? That is what we're waiting to see this week, if not next week. The major support, if we break out of the current consolidation, is going to be around 85.76 a share. Roughly, I'd say between 85.5 and $86 per share is a good zone to have. And then current zone for support is around $88.3 a share. And then the two main resistance, the first one just inside the daily that we're looking at for the last 4 days consolidation. We've tried to break intraday, and when we do break it open or intraday, we pull back pretty quick. That's going to be roughly 90.5 a share. But the main breakout that we want to see with AMD for continuation on the upside is between $91.50 a share and $92 a share. So now we're going to look at Amazon, and I'm going to start on the daily. This is also another one, just like Apple I've been talking about. I kept saying we're going to push. If we do contest the area, we do have a major reject coming with this falling wedge in action right now with Amazon. I will highlight the main rejections we already had. This one was short and didn't touch the main trend line. A lot of people will say, well, why don't you bring it down so that all three are getting touched? But it's very inaccurate doing that. It's not very smart to just put it on the top of the wicks of candles. You want to play it where it's overall hitting and touching. I don't want to put it around the tops of these. I want to get it where the most consolidation, the most zones are, and then work the other trend rejects into that play, basically. I don't just want to only do the tips of every candle. That's how I personally do it. Other people may feel different. That's fine. Just like the support down here, I'm looking at the overall touches and not just, I'm going to bring it down to the very bottom wick or the up wick. I'm only focused on like the bigger area where there's a lot of volume, there's a lot of consolidation, a lot of candles have touched, but they just can't break downside and show strength to keep pushing downside. They fake out, pull back upside. I'm going off the main zones. So currently right now with Amazon, I'm going to switch to the 4 hour. We know on the larger frames, we're currently contesting a fallen resistance trend based off the falling wedge. Depending on how you have that trend, we're either breaking above or breaking like currently underneath, trying to break above. So when looking at it from the 4 hour now, we're trying to find a reject that could be coming up. Since we are in continuation, we could see a major breakout like Amazon has had previously once we broke out of the highs that had heavy selling pressure historically. The main question is, have we had the earnings run up already for Amazon? Could this be just people buying in late and we could have even more upside past maybe 110 a share, 115 and contest that 117.50 that touched for last earnings? There's a lot of things that, I think that was last earnings, wasn't it? Yeah, last earnings. There's a lot of stuff that people may try and chase. Me personally, just like every other stock that I will look for and or wait for, I want to see a pullback and wait for something to come to me and not just force it and chase the breakout, hoping for continuation. So when I'm looking at this, I'm looking for a heavy support zone. What zone could I see on the downside for a pullback that may hold and give me a cheaper chance with lower probability of losing to get into Amazon for contracts for call side? So I'm looking for candles, wicks, anything that has shown rejections historically, and I want to get a rough area. And if you look anywhere between here, we've seen multiple times where we've had candles intraday or end of the day and they reject. We've had full candles when we had a breakout and we finally broke back down underneath that zone. We tried to break it again the very next day. This wick got rejected. At open the very next day, got rejected again. So we know around $103 a share to $104 a share, anywhere in that vicinity, Amazon is going to be heavy buying pressure, since historically when it was underneath with price action, we had heavy selling pressure as we pushed up towards that $104 share area. So going off that, I try and make a trend line or anything to show strength in the smaller frames. The larger, we already know we have a major reject from the falling wedge off this resistance trend that's happening in the larger. So now in the 4 hour, we're kind of forming this cup and handle, trying to get buying pressure to break out on the upside. If this setup plays out the way it should, obviously, if you look back to what we contested before the recent breakout, we had that handle form, which was the pullback of a falling wedge kind of. Could we somehow get back to that formation, or could Amazon just keep pushing? For me, I'd rather wait for a higher reward, lower risk case scenario. So if we do get a pullback, I'll look into getting calls based off the idea of this is pushing on every pullback it has. Even though the larger frames are showing uptrend, I want to catch the pullback and not get faked out on maybe the 1 hour or 30-minute, thinking that if it does have red candles, I don't want to think, oh, puts, this is going to keep going downside. I want to try and catch the heavy zone that historically was resistance, but now it will act as support. When going off pinpoint zones, the main area, obviously, I've already talked about is around the $103 to $104 a share. So I'll put a level roughly around $103.70 a share. The first level that has to break before we even talk about the 103.7 a share, we had a double top rejection before the breakout on Friday. So that could act as the only support if we pull back. So I want to see how Amazon will react and how volume will correlate if we do pull back to that $105 a share zone area. So I'll put a level there for another support. And now I'm looking for a resistance. Since we are currently breaking out, I don't want to use only Friday's day high. I want to look for something historically, because if we break out above Friday's high, a lot of people will just think, oh, we're breaking out, not realizing there could be heavy resistance slightly above that happened a few weeks or months ago. So going back to the last earnings report where we broke 117 after hours, the very next day we tried to break out and we showed heavy selling pressure around about, I want to give it some leeway. I don't want to just want to do the top of the wick or anything. So I'm going to do it roughly around 108.5 a share for Amazon. And when doing that, I will now take it back to the current price action. And now we have our levels. Instead of having a level at 108.15, we could wick above that and push an extra 50, 60 cents and then reject. I don't want to think we broke Friday's high. Now it's time for us to keep running. I'm going to be focused on obviously how volume, how buying pressure reacts, how tape is going on if we do push with Amazon upside above the 108.15 a share. So the only resistance I have before, I would say, the contest of roughly 112 a share, the resistance I have is $108.50 a share. The first PT for support on a pullback will be $105 a share. And then my personal main support I want to see hold, which will be almost a $4 drop. Will that happen? I don't know, but that's my lowest risk and highest reward possibility for call area. That's going to be $103.70 a share. Anywhere in that zone between, I'd say at the highest peak of a touch downside, $104 a share, I would start watching for my sake. So here is a new one that someone recommended. That's Bank of America, BAC. I'm going to start on the daily. And as you can tell just from my lines from last year, I've traded this multiple times before. So currently with Bank of America, just going off the daily, it looks like we're hitting a heavy historical support, which is now going to act as resistance. But it's pretty sketchy since we had a lot of gap downs overnight. So I'm going to switch to the 4 hour and see what I can do with all these zones back here, because these are the main three just in the past, I'd say, year time. So I want to get a level around this double bottom area right here. I want to find somewhere where, for my sake, it's very comfortable for me to put a level there. Other people will say, I just want to put one like around this area at 29.5 a share. I want to look for something where if we do push upside more, it makes me wait longer, even though the breakout in the smaller frames may have happened already. I don't want to get faked out on the smaller frames, but the larger frames show me rejection that I just am not focused on, because in the moment I'm seeing green, green, green. I don't want to lose track of a zone just because it broke out from the previous week or whatever. So I'm going to put a level. This is obviously how I see it. I like how we held for almost 4 days back to back around here, roughly $30 a share as support. And then previously before that, we had a few candle wicks that didn't touch all the way, but they were pretty close, only about 30 cents higher up from that 30.14 area. And then moving to the double bottom that happened, we obviously were lower than the zone I just put. So this is where it's like, I have to find a median that I'm just content with. It doesn't have to be a pinpoint. I mentioned this a lot. It's not like you're finding a direct 0.05, 0.18 that works. But for me, I just want to find the overall zone because it gives me more patience in the waiting game with the candles being formed. So I'm going to keep that there because going off the current times, we're kind of holding. This is going to be like the first resistance around the 30.14 for Bank of America. And then in the smaller frames, I'm going to find the actual push upside past that first resistance I just put in. Since we're currently there historically, for the week of, we've had a lot of wicks around this area, around that basically $31.20 a share. So I'm going to put a level there. And the way I kind of try and look at it from, I know I just said a few minutes ago, the smaller frames can fake you out. Since we're currently at the price action for historically with a heavy zone that I found, I'm looking at the current smaller frames, even though it's the 2 hour. It's just since March 10th. I'm focused to see, okay, if we break out of this pattern that we're in, what's the upside possibility? Like, could volume pick up? Because right now we're holding off low volume and we haven't had a major pullback yet. So if volume picks up, we could see momentum on the upside with Bank of America. Obviously, the finance sector has to be good, and anything else that may correlate with it. If SPY's red, Bank of America could also follow. So the overall market will also play a part in this move that could happen. I don't want to put a level at the high from this area around 31.40. I want to give it some leeway, just like how I talk about. I see a lot of 2 candle fills on the 2 hour that rejected around just around $31 a share. So I'm going to put a level at a psychological number for 31 a share. And I'll make that one yellowish, and the closest one to price action, I'll make that orange. The main support, just going off the smaller frames here that I see, there was a lot of rejections here before we broke out, around $29 a share, basically. So I'm going to put a level there. It's kind of like if you're looking at this setup, let me make this wider because that random candlestick right there kind of ruined this. We're kind of forming like a cup and handle, currently pulling back, making that handle formation. The breakout is obviously $31 a share. Are we going to pull back heavy enough to touch the $29 a share zone? I'm not too sure, but that is the lowest risk if you want to play calls with the safest possibility. If you do see a break above the 30.14 area for the resistance and it holds above after breaking, you can play calls on that consolidation if you see the buying pressure pick up or even just volume in general showing upside. You just don't want to rush any play that breaks out right like instantly at open or a few hours in, because momentum may not hold until close, and you could always get the contract cheaper the next day or at the end of the day before overnight hits. So you always want to wait for the plays and not rush anything. For me personally, if I am waiting for a good dip buy opportunity, I would be looking at $29 a share, even though that is a pretty decent drop. It's almost $1, which would be a 5% move roughly for a Bank of America. If you're looking at the first resistance, which is the consolidation right now, that's roughly $30.14 a share. The major breakout I personally see is around $31 a share with a high in the zone of around $31.40 a share. So the breakout could fake, but if you catch it before it can test 31 a share, you will be up a decent amount based off the price action move per share on Bank of America. So I have DraftKings pulled up now, and this is one I talked about last week, and it basically did almost everything that I was mentioning if we caught the move with continuation off volume if it caught on and kept pushing, which it did. Every day this past week, it had a green day. It broke out of the falling trend that we had going on in the smaller frames, and it finally broke out above this main triple top. And we're currently trending upside with a gap fill almost to $24 a share now. Every level that I talked about is obviously out of the question. The main thing that I can show you guys, since we haven't had this happen yet, the previous resistance back when DraftKings was roughly $19.50 a share, we had a major rejection zone with the previous historical triple top around $21.25 a share. Now that we have broken upside above that zone, this is going to be a resistance switch to support. So it's a resistance to support switch now, since the price action is above. Since historically that acted as a rejection, it now acts as a bounce area and or support if we pull back the 21.25 zone on DraftKings. The major thing that I'm kind of waiting to see with this, I don't want to expect a bounce if we pull back, because this could just make a higher high and then pull back down to the high $19 shares again. So I don't want to try and anticipate just to buy what we already broke out of, since it was a pretty quick hit. Buying pressure was increasing, and we had a lot of momentum upside with very light pullbacks in the process. So continuation on this could keep going, since we are showing a lot of strength and they do have earnings the beginning of May. I personally, since the call move has already happened, I don't want to try and make that catch again, because we've already had 5 back-to-back days of green for DraftKings. So I'll let this kind of move for a bit. I won't monitor it as close as I usually do, and I'll wait to see how it forms. If we have a pullback Monday or Tuesday to the 21.25 and say we hold that 3 to 4 days of trading, then it will be a consideration to think, okay, if we're holding here for so long, is the volume lighter? Is it heavier? What's the possibility of it pushing off this now? If the volume is light and we're holding, maybe the volume is heavy and we're holding, we can try and determine what could be an effect move based off volume and just the support zone that it could hold. So I don't have any levels for this currently, and we can always come back to this during the week and talk about it in the chat if we have to. So a recommendation we had was ENPH. This is in the energy and oil sector. So the main thing I tell people, if you play an energy and or an oil stock, you want to look at XLE, which is the energy and oil sector, mainly the energy sector. The biggest reason I tell people about this is because a lot of energy follows suit with these stocks. The ETF is going to follow pretty close. And if it does lead, while say ENPH, XOM, Chevron, say those are lagging, but the ETF is pushing, it could show signs of a possible late reaction with the shares to the actual ETF. So when looking at ENPH right now, a lot of people, hopefully you guys are starting to catch on with how I do this. I'm looking at the previous tap out and seeing if there's anything else historically that may correlate with that. And when we've broken above, we usually pull back inside pretty heavy. So just going off this area right here, we have a major rejection. We can put a level here based off the 4-hour chart. I want to give it some leeway. I'm going to keep saying that word, and I'm going to keep being disciplined to myself to give stuff room to push heavier and higher upside, and not just expect the lowest point of a zone to touch and hold, because I don't want to get faked out right away. It gives me more patience when I see a level somewhere and it hasn't touched yet. So just using this, I'm going to put a level roughly around $229 a share. I'll make that a yellow color. I'm going to take away the levels that are way down here. So now that we have I'd say the main rejection zone, obviously the gap fill will be a higher push, roughly to $245 a share or $250 a share. If we push above, it's basically the same setup as DraftKings without as many wicks upside. If we pull up the daily on DraftKings, you can see this setup right here, basically a triple top. EMPH is roughly in the same area right now, just with less moves so far, since it hasn't had as many contests as DraftKings had. So going off just the 2 zones I have right now, or 2 levels, we can look at EMPH for a rejection around $229 a share. And the main support I see, I'm going to pull this up slightly to correlate with the past few days of trading where we wicked out. I'm going to keep a level around $218 a share just for my personal visual representation. I don't see too many other levels within this. I only see basically a consolidation of up, down, up, down. If we do break upside, I'll put a level in just for people for clarification. The first PTIC is roughly $235 a share. I'll make that orange. And of course, the main gap fill is going to be roughly around this zone right here. And that's going to be around $250 a share roughly. I'm going to keep this white highlight here so we can review this following week and see how it goes. Overall, energy is hot right now. It's looking good long-term into the middle of this year. Can these heavy pullbacks on energy stocks make that comeback? If we look at EMPH on the weekly, we're basically at this support rising trend, trying to make that next push upside if we can break out of these wicks and heavy consolidations historically. So we're currently at the zone that respects very well with price action. I don't trade EMPH very often, but I do keep eyes on it. It is about, I'd say, top 3 of the energy stocks I do watch, ExxonMobil being the top one, obviously. So just going off this brief chart that I have, the main and personal only support that I see is around $218 a share if we pull back and hold there. The first main resistance is around $229 a share. The main, I'd say, gap fill for this week will be $235 a share. If we break out of the $235 a share area, I would not be surprised if we can test or break above $250 in the month of May. So those are the main 4 levels that I do see. Let me put a line just so you guys can see the number representation on this. I'll just make this, let's just go greenish. $250 will be the biggest gap fill if the 235 breaks out on the upside. So this is the main visual that I see for ENPH. Okay, another recommendation which we have not charted on the Sunday session, it is Ford. The symbol abbreviation is just F. When I start with stocks, I haven't charted with, obviously you guys, I haven't charted this, but this is one stock I watch almost every day. Ford is one of my bread and butters for a small entry account. Contracts are cheap. If you play week of, they're roughly, I'd say, between $5 and $10, $5 and $15 a piece. Very small account friendly. It moves slow unless you catch a major move, which we are currently setting up for one. So we're going to look at the daily first. And right away, the only thing that I do see off trend lines is mostly this sideways triangle getting going. There isn't much going on since we did have a major gap down, so there's not much we can assume is going to happen. But the biggest thing that we can see based off gap downs historically is that when we do consolidate and hold at a zone, we possibly end up pushing with a higher reward compared to risk with that play for calls. Obviously, this trend can be very misleading. You can put this almost anywhere. So we don't really know where the gap fill is going to be. But if we go off just the dips and the rips, we can use this to find the higher lows that are forming. We obviously had a breakdown, but we held the previous starting point of the bounce. Can this hold a higher low, or are we going to pull back down to the previous zone area that we'll have to hold? This is one thing that's very hard to determine with Ford. It moves very slow, but when it has a move, it's very hard to catch it if you missed it. So going off the 4-hour, we're obviously already consolidating for 2 days straight. It could be forming a bear flag. It could be the next support zone holding. There's not enough information right now to figure out what could happen. The lowest risk to highest reward is obviously playing calls if we keep consolidating or even dip lower to the actual trend that I have formed. I wouldn't say that it's smart to just buy calls if we do push upside at open. There's a lot of levels that could reject with Ford. There's a lot of rejections historically as it made movements through the center of this symmetrical triangle or sideways triangle. You don't want to assume too much. If I was playing this, obviously calls, I would give what I see for zones for on the smaller frames. Obviously, the larger ones are going to be more of a dip, but I don't want to chart $1 to $1.50 out for the price action for Ford. I want to keep it simple for just this week to see how it moves. It's not a big mover. So If it does play out the way it should with these trend lines, with the support trend coming in, we should see a nice bounce. But how quick can that move hit? How long will it take for it to jump $1 a share, $2 a share, however much it would be? Going off the main support, I see roughly around $11.40 to $11.50 a share. That's only going to be a 40-cent drop off the price action for Ford. If we do dip and hold that level and push, the first main level that I see is roughly around $12.25 a share. And obviously the main gap fill is going to be the falling resistance trend off the larger trend line here. And that's going to be roughly around $12.50 a share, $12.60 a share. If you've never played Ford before and you'd be interested just because knowing that it is cheap, the contracts are extremely small account friendly. If you have a large account, it's not going to take a hit on your account. If you take 5 contracts, 10 contracts, it's a super light position size for a larger account. Smaller accounts can grab 1 or 2, and it's a very appropriate management sizing for an account. If you have a $500 account, you can grab 1 contract. It's going to max out to probably 1 to 2% of your account portfolio. So you have a lot of leeway with this. It's not very risky. The stock moves slow. If you do catch the move, continuation will carry this extremely well. Contracts can get a lot of momentum going. So when playing Ford, you want to try and track the bottom. You want to try and catch the bottom for calls. If you want to chase the breakout, that's fine. But the one thing people may not realize about Ford and other small stocks that are very cheap on contracts, if they don't move or even just slow movements upside, your contract won't gain as much value as you may think, unless if you play at the money or in the money contracts. So you have to be very cautious with stocks like this. I want to repeat this again before I move on to Microsoft. The main support I see on the smaller frames is $11.40 a share. The first main rejection of resistance, I would see roughly around $12.25 a share. And then the actual gap fill for the falling trend resistance will be roughly around $12.60 a share. So moving on to Microsoft now. We've been holding this zone on Microsoft for roughly a week and a half to 2 weeks now. There's not much levels to add. All the levels are still intact. They're all still working out the way they should. I see no reason to add anything, take anything away, lower the support, raise the resistance. We're literally still zoning. So this chart is still perfect. We're not going to change anything. We're not going to readjust. We're just going to keep it how it is and see what we can talk our way through with this. Since we are starting to form a slight curl on the downside, we can add 1 level just in case 282 a share does break. And if we do add any level, we want to find the previous main rejection zone, which I see roughly being around, I want to put a level around 278 for now and just go to the 4 hour to see closer. I'm going to lower this down to about 273 area, which obviously that's about a $10 drop. But you have to realize if we break this heavy consolidation on the downside, it's going to free fall. It's not just going to wick out and pull back. It could, but you want to think from a logical perspective of, okay, we've been holding this zone between 282 and 292 for literally, 20-something days. Do you really think if we break on the downside or upside, it's just going to slightly break and pull back in? It can, but if the momentum's there to carry it, it's going to free fall or it's going to push and break out heavy. We're at that point where a massive move could be coming from Microsoft. We do have earnings for it coming up. We don't want to just chase one side if it does break out or fade off. So you want to try and catch, how I do it, you want to try and catch the bottom for calls, catch the top for puts. You want to try and anticipate the move based off zones historically. We've kept the 282 for support for I don't know how many weeks now, still has been holding. We've kept another zone roughly around $284 a share. That's still holding it. And when it doesn't hold, it pulls back above and shows very hard correlation to where the price action is. It's still respecting everything that happens. And of course, the main breakout level for resistance is going to be $292 a share. Microsoft, the earnings is going to be the move that breaks it out upside or downside. It could happen before. I know they have their earnings on the 25th, which will be Tuesday. I personally don't try and straddle. It may be good. You never know. Play after earnings, play before earnings. Just make sure your risk is minimal, probabilities in your favor for what contract you do want, and don't risk too much in case you are faked out one way or the other. So now looking at Netflix, I'm on the daily right now. And the main thing that I'm looking at and or focused on, we rejected the trend. We didn't touch it 100%, but we formed that downside reject. The first thing that I question for me, the zone that we've been in historically has held and or rejected. And since we're currently above that zone with price action, we're holding it as support. Can Netflix curl or at least make this inverse cup and handle? I'll go to the smaller frame so it's easier to see. We have this inverse cup and handle forming. If the pattern plays out, we're going to form this little rising wedge right here. Could we fill this gap on the upside with the handle, break upside, or could we reject and follow the pattern with the inverse happening? I'm going to keep those trend lines there just for clarification for myself, so I remember the pattern is there. I don't think I'm going to be watching this as heavy as usual. We're consolidating. We already had earnings on it, and not much of a move has happened. We're at a heavy support, also with a heavy resistance upside with two levels. One at the 330 has been very heavy, and obviously the 350 zone is the gap fill. Can we break the downside? I don't want to risk buying puts if we're this low when I should have got puts around 350 before earnings in the top zones. There's a lot that I look into. There's a lot of stuff that I do think over before I just enter a play on the smaller frames. I've missed the major move on the downside. I don't want to try and catch puts now. I would like to see a slight push, maybe a trend hold on the upside. Maybe we recontest 222 a share and we hold support and push back upside to the gap to 330. I'm not as interested in Netflix this week. It's at a heavy zone historically. We've always held for a few days when we're in this price action. I don't want to risk a play on this, so I want to find something safer. But just going off the zones I already had with Netflix, the main support is around $222 a share. The first resistance is roughly $330 a share. And then the main gap fill on the upside on the breakout is going to be $351 a share. So now we are looking at NVIDIA. And just like Microsoft, NVIDIA is practically in the same setup, same accumulation with volume and liquidity. It's just not breaking outside the consolidation forming here, whether it's the resistance break or the support break on the downside. The main support of 263 a share is still holding on NVIDIA, so I'm going to keep that there. I don't expect us to have a break on the downside, and if we do, the main gap fill I see is roughly a $20 drop to 243. We have to fill these gaps to make higher lows on the larger time frame for the trends. So I do see the 242 to 244 area being like that gap on the bottom if we break support with heavy selling pressure. And of course, the main rejection for resistance is around $285 a share. For the last about month straight, we've been zoning between 264 and 281. Just like I said before, NVIDIA, they have earnings May 24th, according to Webull, if that is correct. Even if it's not correct, they haven't had earnings yet. So could NVIDIA have an earnings run up? Could NVIDIA sell off if Microsoft reports bad, if other tech reports bad? You want to take into consideration outside factors and not just NVIDIA as a whole. Other tech, other market sentiment. Is QQQ going to be strong? Is SPY going to be green or red this week? You want to find correlation and other back testings to find resolution with what you should do, to find clarity, basically. Obviously, we're at a heavy zone for a rejection around that 285. You don't want to just hope for the best or hope for the worst with this. You want to wait for the setup to come to you, wait for levels to hold more, maybe wait for other tech earnings to report their estimates and everything, see what they come into and if they push or not. Play the reaction. If you want to play beforehand, that's fine. Just make sure your risk is low and your probability is obviously in your favor for whatever you take. So just to repeat, The main resistance is going to be $285 a share on NVIDIA. The main support is going to be roughly $263 a share on NVIDIA. And then if we do break downside, I see a gap filled of roughly $244 a share. So now looking at SPY, I'm going to delete a few of these drawings. So SPY, just like we all know, it's been ranging. It's been just up, down, up, down. We're at a huge main resistance, basically consolidation zone that happened back in February of this year. We're forming currently on the smaller frames. I'm going to switch to the 1 hour. We have this little falling wedge going on with lower highs and lower lows. Could we break out above this? Could we break and fill the gap on the downside back to 409 a share area on SPY? Could this be a cup and handle and we're just forming a handle before the major breakout? There's a lot to consider on the smaller frames, and obviously the larger frames, they're very bearish if we do reject. We could also be forming an inverse head and shoulder. There's multiple things going on right here. So I personally feel with all the data also being released this week with the economic numbers along with earnings, SPY is going to react to whatever the data presents itself with. I don't think chart will play out the way it should. There could be some fake wicks and pullbacks, maybe a fake breakdown with a heavy push after. I'm not too big on trying to predict or like assume which way SPY is going to go. The smaller frames is looking bullish. It could hold off these levels and push upside. The only problem is we have a lot of rejections around the highs in this time frame at roughly 415 to 416 a share on SPY. There's going to be a lot of selling pressure there. The volume shelf is obviously holding roughly around 411 a share with heavy support. Buyers are keeping it up every time it comes down. Can we curl? Is this a cup and handle forming? Are we just going to hold trends around this area and we're just going to push up? There's a lot to consider with this, and I'm not too fond of trying to explain what I feel is going to happen because I like to watch it the day of and use outside sources to basically give me confidence in what I'm thinking. Maybe I'll use Tesla, I'll use Amazon, I'll use Apple, I'll use a few ETFs. I'll look at the NASDAQ and the Dow Jones to see if they're respecting what SPY's doing. I always try and find other stuff to correlate to give my edge more probability. I don't just want to watch SPY and say, oh, these candles are forming a bearish setup, I'm going to get puts. What if it's forming bearish, but other stuff is pushing and SPY is just lagging? Maybe it's just a false setup and it's not going to happen the way you see it. I'm not in a rush to try and catch anything. And the only thing I do see, if you want me to say bull or bear, I do see us curling and trying to get a push going Monday and Tuesday, only for us to reject after tapping out around 416 to 417 a share. If we do break out a SPY, I still have this gap fill roughly at 420 to 424 a share. Can that happen? I'm not too sure, but that's the main area of a push if we get one that breaks out from the 416 to 417 a share. So just to repeat this before I move on to the last stock, which is Tesla, the main support in this zone that I see is roughly $411 a share. So the support is $411 a share. The main resistance before the actual break, I see that around $413.60 to $414 a share. The major break of this zone is going to be roughly $416 a share. That is the breakout level that I see on SPY. So now we're looking at Tesla. And I'm going to take away a few of these levels. So obviously Tesla earnings made this drop roughly close to $20 since the last time we charted this. We fell outside of the rising wedge thing forming. The higher lows the same resistance level every time it pushes up. What is the next move for Tesla? What could happen? The first thing that I see with this are these wicks from the downside that held. We're currently below this area, obviously, but if we get a push upside, Tesla could show strength, and maybe the earnings was just like a scare sell-off, or this could keep crashing on the downside. It's too much to really pick and choose right now with Tesla. Going off low risk, high reward. Obviously, calls is the low risk going off the larger frames, the 4 hour, the daily. If you're looking at it from a smaller frame perspective on the 30-minute, This could be forming a bear flag, and we could slightly push up just to crash back down. So going off levels with the smaller frames, I see a resistance roughly around $169 a share area. You can even pull that down, raise it up anywhere in that zone between 168 to 169, 169.50. I see resistance here on Tesla. And if we're looking at support now, just going off what we're in right now with the smaller frames, I'm going to put it basically where the double bottom is, roughly around $161 a share. Going off those for the larger frames, we can pull up this chart and see what we find. I'm going to go back a little bit since we are gapped down from when we previously have been. And I'm going to see if there's any correlation we can find for more support. We had a lot of rejections in this area off of Tesla historically. Back in, what year is this? 2020. From basically October all the way to December. We had a lot of rejections on Tesla here. So I'm going to put a level which will now act as support for Tesla on the current time frame. I'm going to put one roughly around $151 a share, and I'll make this one purple just so I know this is a main zone if we keep dipping on Tesla. Obviously, that's another $10 drop. I don't expect that to happen, but you want to be prepared just in case. Tesla just showed us on Friday, well, overnight, Wednesday into Thursday, it can drop easily off of, obviously earnings was the cause of that, but continuation could keep coming if people are getting scared out of this, if there's no buying pressure, if the big money starts to sell their shares. You never know what could happen now. So the main resistance I see on Tesla is going to be $169 a share roughly. The main support that I see is the first one, which is $161 a share. The main gap fill on the downside going off the historical on the larger frame is around $152 a share. Outside of that, for the smaller frames, there's not much to do with below 160 a share or the 161 a share. Does anyone have any questions? They want me to go back to a stock? Is there anything else they want me to chart while we're here? Let me know what you guys think. We have 7 minutes left until 9 o'clock. Is there anything that I can do better to make these more interactive, to make this more enjoyable? Let me know your thoughts. I'll wait and see if anyone has anything to type up. Because if not, we can end this early. And I feel like, this week, there's a lot of data, a lot of big earning reports. It could be a massive week, whether it's upside or downside, but I do see a move happening this week. I have a lot of speculation, obviously, of what could happen. It all just depends on earnings, price action, world news that could come out. We never know. And if no one has any questions, then we can just end it right here. And I will see you guys on Thursday, if so. Yeah, you're welcome, Perez. Appreciate you for showing up like you do. Patience this week, and you will be rewarded, I promise. Yeah, you're welcome, man. Appreciate you for coming up. It's always good for you to show up for this kind of stuff. You never know what could come up. You never know what you could see that you could learn. It's always pretty important. You're welcome. Yeah, you're welcome for the knowledge. You guys are always welcome to ask questions even outside of class.